Good morning, everyone. My name is Vera Esteves Cardoso. I have recently joined Morais Leitão's growing regulatory practice with special focus on fintech, licensing, payment services, AML compliance, and crypto asset service providers and other related affairs. After 9 years in Banco Portugal, where I had the pleasure of coordinating the market entry team from an AML CFT perspective, it is very satisfying to join such an ambitious team in Morais Leitão, and it's also very satisfying to be able to participate in such innovative initiatives, such as this one we have here today, alongside Fintech House, who we are very happy to partner with. So getting down to business, today we are here to discuss how to leverage data to fight financial crime with a digital-first approach. And as we all know, innovation is vital in the financial crime area. And even though technology may be gradually improving, criminals are also getting more sophisticated and regulatory pressures keep increasing. So here today we have Amardeep from Chainalysis. Can you please introduce yourselves?
Hi, good morning everyone. My name's Amardeep Thandi and I lead crypto regulation and compliance at Chainalysis. For those of you who don't know who Chainalysis are, we're a global blockchain analytics company who effectively de-anonymize blockchains to provide investigatory solutions for government, law enforcement and regulators, and also compliance solutions to TradFi crypto-native businesses. My main responsibility is to help TradFi organizations navigate through their crypto journeys.
Dmytro, please.
Yeah, first of all, wow. I'm really grateful to be here and see so much bright faces here. So my name is Dmytro Medvid. I'm a co-founder of Huntly, most flexible transaction monitoring for your compliance need. So Huntly is compliance dashboard for transaction monitoring, which could connect to different data streams and analyze data in real time, providing meaningful insights for your compliance teams as well. So I'm responsible for the product development, and we started in 2019, and as until now we are fully bootstrapped and sustainable company helping to fight fraud.
Interesting. Okay, so I'm João Moura, Portuguese, of course, but I actually lived in the Netherlands for 8 years now. That's where I founded Fraudio. So Fraudio is I would say, Dutch Portuguese company focusing on fighting financial crime and frauds in payments. So we do transaction frauds detection in payments. We also have a product specific for acquirers where we detect fraudulent merchants and we help shut down those fraudulent merchants. And we also do anti-money laundering post KYC. So this is a bit to answer that question. Indeed, you have gatekeepers, right, that prevent someone from entering your network, but then you need to continuously monitor not the identity, but transactions, and we do that. We have customers in 4 continents. We process over 100 million transactions per month. In Portugal, we work with companies like Viva Wallets, SaltPay. We have a long-standing working relationship with Sonai, with the Universo cards, and expanding to banks as well here in Portugal.
Thank you, all of you. So first question is for all of you. Why is the digital-first approach to fight tech with tech so important in the times we're living in? And how do you see the integration of your products and services in the Portuguese and European market in the next couple of years? And what aspects are you most looking forward to? So maybe Amardeep, you can start.
Yeah, thank you. So I guess, you know, I think I've been in fin crime investigations for over the past kind of 12 years prior to joining Chainalysis, and you know, we're becoming a more digital world, and the typologies that these illicit actors are using are a lot more sophisticated, and therefore, we are seeing the use of kind of, digital solutions and data a lot more kind of appropriate and efficient and effective at investigating and kind of bringing actors to justice. In terms of what I'm excited for in the future is, I think, over the next couple of years, we've seen a significant amount of regulation, especially in the digital asset space. And I feel that the next 2 years are going to be really, really, important for the digital asset space as a whole. Just given the kind of, I guess, decade that we've had. I think in the keynote we alluded to, some businesses and some kind of fallouts that have happened in that space recently. And I feel that not only are we making the kind of, I guess, adaptations to existing regulatory kind of processes, but we're also now getting into, we discussed, I think someone touched on MiCA and kind of what's happening in that space. I think not only are we seeing regulation, but we're also now, more importantly, seeing the adaptation to really understand exactly where blockchain's going and where it can take us and the benefits of the technology. And so really, creating a balanced kind of regulatory framework or these regimes that we're seeing pop up, I think that's what we're going to see, and that's something that really excites me.
Thank you very much. Dmytro?
Yeah, so for the last couple of years, we see increasing in the online fraud. So as a COVID breakdown, like the criminals, it started difficult for them to just go to pickpocket as it was usually for them. So they went online. And with that, they starting to be like more smarter and more faster. They using high-end technology. They also this is a full-time job for them. And to be smarter and faster for us is also very important. And technology is something that could help here. So let's talk a bit about the account takeover. Account takeover is basically one of the most typical and dangerous type of the fraud. Because it's usually a multi-level process which involves different types of technologies from the fraudster side. And from our perspective, they starting to be more aggressive, and they also targeting most vulnerable of us. And this is a problem. So basically, the multi-level security is a key here. So basically combining KYC and KYB on the onboarding stage, this is very important. This is the first line of defense. But it could fail basically because without the further help. So this is where the KYC comes into the game. Monitoring the behavior of the customers, taking into account the different data. For example, like customer profile information, their risk score calculation, as well as the information about their interaction with the user interfaces, authorizations requests, and of course, information from the transactions. So basically, this information also could be enhanced using the different data providers, for example, databases for the name screenings against the sanctions, PEPs, criminal databases, offshores, and so on. It is also very important, especially with the digital assets, to have such solutions as cryptanalysis platforms. So, for example, like Chainalysis, it will help to enhance information about the wallets and understand who is staying behind those. So, yeah, this is very important, and for the Europe market, it is very important to understand that KYC, KYT, and combined, this is something that would help to fight fraud and be compliant on an everyday basis.
Thank you very much. João?
Yeah, so maybe I'll deviate a bit from this and just from discussing what I'm excited about, but maybe give an extra dimension to the problem, one that's more connected to the regulator and to let's say what the present looks like. And the present is very normative, so it's very the regulators mandate or tell regulated companies what to do ultimately. So they say you need to you need to report on transactions above 10,000 euros coming from countries in specific in a specific list. This is a really basic type of report that you need to be able to provide, and then of course there's periods of time during which the accumulation of smaller transactions also amount to that, and so you need to report on that. But the future really doesn't look anything like this from a regulation perspective. It looks a lot more complex, and think about, and for the ones in the audience that have anything to do with acquiring and have been paying attention to strong customer authentication and 3DS, etc. Now, obviously, almost the holy grail in payments is especially in e-commerce, it's to be able to not do strong customer authentication, not bother your customers with strong customer authentication, because it causes friction, right? And the same goes for AML. So regulators are going towards, and I'll tell you a story very briefly, but they are going towards what's called subjective compliance or subjective regulations, where they don't tell you what you need to do, but they expect you to do the best that you can, and to a level that actually stops money laundering, for instance. Okay, so they won't tell you you need. So it's not prescriptive; it's a lot more subjective. Hence the difference between subjective and objective reporting. And this is tomorrow. Okay, so this is coming soon, and you cannot do this with your standard rules-based systems, and and companies are really going to have to adapt and to bring on tools that are more generic, more centralized, more able to connect dots between different money flows, different streams, not just payments, but money, wallet-to-wallet transactions, or direct payments, or ATM withdrawals, or anything that has with the crypto world. And so the story that I just want to tell you really briefly is so Fraudio actually spun off from ING, the bank ING in the Netherlands, and when we spun off, they were hit with an 800 million fine for failing to detect a very specific and really very silly AML case, or money laundering case rather, which was they had a merchant on the acquiring side. They had a merchant in Amsterdam, in a pretty dodgy area in Amsterdam, that they were selling. It was basically an underwear shop, okay, in a really dodgy area, and they were processing tens of thousands of euros overnight, using credit cards. And it turned out that they had a POS system, a POS terminal, that they had taken to Suriname, and they had a VPN connected to the Netherlands, and they were processing money that basically with credit cards from Colombia, so drug related. The story goes a bit deeper. You can ask me about it during the break if you want to. But basically this is super simple to identify. But this is obviously no regulator is going to tell you need to do this. But they were slapped with an 800 million fine. The Netherlands and the UK are very much ahead of the game when it comes to regulate to money laundering or anti-money laundering regulation in Europe, but it's coming. Okay, it's coming to every institution, and so this is. I don't want to be a scaremonger by any means, but the future is just around the corner, and rules simply won't cut it.
So, and to speak about the topic, so that's why new technologies such as AI and machine learning help compliance teams also step away from certain cumbersome and manual procedures and focus on certain efficiencies. Now, going to specific questions for Dmytro. How is Huntly able to ensure the maximum flexibility possible by offering solutions that are able to comply with all the different applicable regulations, including in what concerns the gambling sector, whilst maintaining a very speedy integration for your customers?
Yeah, okay, so first of all is data is everything. So basically you need to have ability to integrate with the different data sources. So this is what we're covering and where we can help. So we analyze information with from the transaction perspective as well from the customer information and interaction, authorization requests and stuff. Another is a dynamic and flexible self-maintained system. So what we see currently a lot of in different organizations, and specifically in the old-fashioned banks, they have like, as João mentioned, like rule-based engine. Only most of them are hard-coded into the systems and highly not efficient in the maintenance. So this is where we have been introducing rule builder that allows you to do it like on the fly in the user interface. It's no code and you can integrate it with a different system and communicate between them. Another point here is replicating of a risk assessment model. So basically there are a lot of different regulations around Europe and the world, and there are also like different types of the businesses and the different regulations applied for them. So this is essential for them to be able to replicate risk assessment model on the customer risk scoring level. So this is also that we could address with our system. Another point here is dynamic APIs. So basically, whenever you want to create a new scenario and new risk scoring model, you will introducing a new data points. And this information should be added from the IT perspective, and it usually takes a lot of time. So this is why we have introduced the dynamic APIs that allows you to create a new data entries like on the fly, also without any code involved here. So you're just going into interface and configuring the system. Another point that I also wanted to highlight is basically rule engines and AI. They're like mostly complementary tools. And we have in our database a lot of different scenarios. There are like more than 400 of those. And what we currently introducing is a marketplace for those scenarios for different types of businesses. So the system will be delivered for the customer within the preset of the different scenarios for fraud detection and prevention, as well as you then can install additional scenarios depending on the business that you're actually doing. And then on top of that, there is a community behind this. So basically there are a lot of different organizations involved in the payment business, and they are creating on a daily basis a lot of innovations into their business. And it is essential to have ability to share those ideas between the community, which will help also like in our common goal to fight fraud and be compliant. And in regards to the gambling sector as well as to e-commerce, they're not that much different from the perspective of the monitoring. And they also introduce new challenges that also could be addressed by us, and not only us. So this is basically responsible gambling, betting abuse. It's opposite betting. This is what a huge field for anti-money laundering and for specifically money laundering for the criminals. So this is also what should be addressed and where companies should be focusing on.
Thank you. Compliance, especially in mid-sized and large companies, is quite expensive. So companies have big compliance departments and various different softwares and data sources for their daily routines. Dmytro, do you have any idea on how to help fix these problems by making compliance cheaper and more effective? Is there a business case here, or is it just a regulatory issue?
Yeah, so basically I believe that the usage of appropriate software combined in these matters is very important. And what we currently see in mid-size and large companies, that they have like compliance department, risk department, IML department, and whole other bunch of departments that are not very much talking to each other. And this is a big problem, and it's a huge problem with efficiency. So introducing the softwares and ways to communicate between those departments, as well as to utilize the information and data that was gathered them like differently, is a key here. So basically what we see with our customer, that they have reducing their costs up to 60% on the day-to-day basis just by using the systems that allows you to communicate between departments, as well as to share information for individual cases, for transactional cases, for IML and so on, because in the big picture everything matters here.
Thank you very much. Now your specific question, Amardeep. So to say that RegTech in the digital asset space is complex is a huge understatement. So given the nature of digital asset transactions, how important is data derived from sources other than the financial service industry for Chainalysis?
Thanks, Vera. I think really the majority of our data actually isn't from financial services. So just to give you an idea about how things work in the digital asset space and how we de-anonymize blockchain networks and transactions. So we use some very complex heuristics, which I'm not going to bore you with or get into today. But we also use a lot of kind of, open source intel, some knowledge and sharing through some of the networks and partnerships that we have. But in a nutshell, a lot of that information, as you can imagine, from a digital asset space is going to be non-financial institutions. So what we don't do is we don't look at providing services that are I guess, not on-chain. And what I mean by that is a lot of traditional financial institutions already have, as we discussed, numerous products out there that are market leading and so forth, from an adverse media perspective, or from a knowledge sharing, Thomson Reuters, and all these kind of stacks of products that they'll have to manage those ongoing risks. We specialize in on-chain data only, and that's something that we pride ourselves with, because that's kind of where we sit. In terms of kind of the actual data, there's quite an interesting place put on kind of the data that we have. A lot of companies, when I walk in the TradFi space, they just think that we're just another one of these products, that they can just slot in to the existing kind of, numerous products that they have in their stack. And I think the fundamental difference really is the data. And what I mean by that is that digital assets, that the ecosystem, the space is very new. The data is a lot harder to come by. And what I mean by that is a lot of these traditional kind of financial products out there at the moment, you were talking about data that has been around for a long time, and a lot of them can obtain those data sources quite easily. The data that we provide through this blockchain analytics and heuristics, open source intelligence is something that's very new, and there is a really fundamental difference between the data sources and the difficulty in actually getting that data and your hands on that data. And so that's why the handful of I guess, blockchain analytics companies out there right now, I guess we have a heavy burden on our shoulders, because we need to make sure that we maintain that data lake that we sit on, to effectively make, capturing illicit actors and complying with FATF guidelines, for example, making that possible, really.
Thank you. And what do you see as the biggest AML challenges for TradFi institutions entering the digital asset space?
I think it's a massive challenge. I think there's a huge amount of challenge. I think, on a daily basis, I speak to a lot of not only neobanks, as you can imagine. Neobanks, people think, okay, they're going to enter the crypto space a lot quicker than some of the the high street banks, for example, but I'm speaking to all kinds of different banks, really, and payment processors and so forth. And I think when it comes to some of the, let's say, more old school businesses in the TradFi space, they find the whole kind of concept daunting, really. When you think about turning on digital assets or crypto into some of these organizations. It's not just an on-off switch. You're talking about a 2 to 3 year program at least. And so what I try and do is help those kind of institutions really break down that kind of journey into steps. So what we're talking about is initially doing some kind of analytics on your own financial institution. I think a lot of the institutions that I talk to kind of find it hard to believe that they don't have a crypto kind of footprint, and they kind of try to bury their heads in the sand a little bit around that. I think with how the ecosystem in terms of digital assets has grown, you'll be hard found to kind of find a financial institution that doesn't have any exposure to crypto. And so understanding kind of where your exposure is and then finding the stakeholders in the business is the first step, I think. So what I mean by the stakeholders, so you're going to have the business side who are going to be kind of the commercial banking team, the people that are finding the services that they might want to start playing in, and then you have the other side of the house, which is the enterprise risk team, so the AML teams, the onboarding teams, the hands due diligence teams, and so forth. And it's actually understanding exactly where they want to play. And then understanding, okay, well, if we want to play here, what's the risks that we're going to be associated with? So that's kind of the first step, I would say. Beyond that, then, you break that down into, right, okay, well, what do you want to start with? And so we can understand your journey and where you want to go and what your risks will be. And when we move into kind of what we would call open for business, you're now, allowing kind of maybe business banking opportunities because they can be highly lucrative for financial institutions. So opening up kind of these, onboarding processes and so forth is kind of an open for business stance. The next step that's very daunting for these institutions are, actually custody of the actual digital assets themselves. So we can see now, I think we had a screen shot earlier of one of the recent kind of, collapses that happened, and now banks are really seeing that as an opportunity to really play in that area. We are trusted, we are trusted with your money, so you can trust your digital assets with us as well, and therefore then we're seeing a lot more movement in that space as well because of what's happened recently, and I think now we're getting to a position where we're getting the regulatory clarity that we've wished for years now, but we're still in a position where potentially central banks aren't giving their kind of stamp of approval yet. So I guess it will be an interesting time ahead, but I do feel that there are going to be some movement from the central banks as well, and then post that, I think there's going to be kind of a lot of work, I guess, for organizations like ourselves to do.
Thank you very much. Movement from central banks as a reaction to MiCA. Some are not really up for it, but it's, don't have that much choice. Thank you very much. João, how does Fraudio resort to AI for fraud and money laundering detection in traditional money flows? And what would you say are your biggest challenges in doing so?
Okay. So maybe I'll try to draw this picture a bit by opposition, or as opposed to what was there before. We've all worked with rules-based systems. They are interesting. They do some things very well. They can be quite powerful, but they tend to be difficult to manage, difficult to operate, and they will cause a lot of unnecessary alerts of any kind. On the money laundering side, they cause burden. So they put a lot of stress to a company's operations. Of course, on the transactional side, they cause a lot of false or unnecessary blocked transactions, right? So they have their place to some extent, but they need to be complemented. And the what came after as a generation 2 almost of fraud detection systems and the financial crime fighting systems were systems that were based on AI and machine learning techniques, but they were almost a one customer or one data set, one set of models type of systems. Okay, so this is almost the orthodoxy in AI. You get one data set, you assign a team of data scientists to work with that data set, and after 6 months, a year, you'll have models, and you will be able to deploy those models and basically have a set of custom models for your problem. It takes a very long time. It's quite expensive, and the maintenance then is also quite tricky, because if something changes, you need to redo this. It's a bit on the painful side. And so Fraudio, we being the youngest company in this space, we're 4 years old now, as opposed to companies that are 20, 30 years, some a bit younger, 15 maybe. What we built is we call it Generation 3, and it's really a centralized system. So we grab data from all of our customers, both on the acquiring side and on the issuing sides, and we map all of this data to one central data schema. Okay, and we put all of this data together, and we train models ourselves. And then those models are extremely specific, because we train, for instance, a model for gambling in Cyprus, for e-commerce. And this is completely different from a model for, in Portugal, point of sales or, terminal, card present, restaurants. Completely different. And we then host all of these models ourselves in our system. And the moment a customer wants to go live with us, it's basically, we look at their data, we map it to our system, we allow them to send transactions through our API, and that's it. We don't need to train models. We already have the models. And we have the models trained with, as I said, more than 100 million transactions per month. So this is, and we have billions of transactions. So some of our competitors, they on their websites, they are very proud to say that they work with 5,000 merchants. We work with more than 600,000 merchants, because basically through our acquirers, we see a lot of data. We process tens of millions of cards on a daily basis from the issuing side. So we have full historic. We have full. Basically, we know the cards. We know what they are supposed to do. We know what the problems, are, and what they can be when connected to specific merchants. So from a next. The link to, for instance, to digital assets, it's really one more stream of data if you think about it. So it's one more way for value, for money. I'll loosely call it money, to flow from one person's hands to another, and of course. We need to be able to extract data from the blockchain. We need to be able to at the end of the day, make it compatible make it look like something that's a stream of money flows. But then, if you're able to link that to wallet, to a person, an entity, a company. And those, we haven't discussed custodial wallets, but those, they are heavily regulated these days, and it's actually pretty simple to then mix the fiat world, right, with the digital assets world. And so, in a nutshell, from my point of view, the only way forward is to have a centralized system, one that's able to drink from all types of money flows, not specific customers or entities. That's really very 2000 or year 2000, 2010 maybe. And again, the regulators will not look at it with a positive eye in the future. Again, in the Netherlands, they have the banks, the local banks have been mandated, and they have really big banks like ING, Rabobank, etc., ABN AMRO. They have been mandated to share information between them for AML purposes, and so we have access to a lot of that information as well. And it's the future. So, yeah.
Thank you.
I'll leave it at that.
Last question. In your perspective, what is the market's biggest misconception when it comes to most RegTech solutions?
That they have to be difficult. That they have to be custom-made, difficult, hard to manage, hard to maintain. Effectively, they can be plug and play. So you don't need to have a huge team to manage a system like this. If you want to go and to do regulatory, objective compliance only, and you want to build your own rule system or maintain your own rule system, yeah, you'll have pain. You will have pain. But if you choose to go with a solution that's already basically packaged, so we have. Think about it in these terms. We process, we take care of all compliance for a company like Viva Wallet, for SaltPay, both on the issuing and on the acquiring side in every country in Europe. So we have contact with basically every regulator in Europe, also in Latin America, also in Asia. So we have all of those rules. You don't need to take care of that. It's almost. It is painful to take care of those of managing those systems, and when the regulators start making the transition to subjective reporting, what happens then? Do you need to then build a team of data scientists to look for those patterns and sequences of transactions that look bad, or are you then going to chase your own tail a bit and go work with a vendor?
Thank you. So our time is up. I think we have some time for some questions.
Hi. I have a question. When I start working in the payments industry, I believe the biggest fraud you can see is something the American industry already found out, and Amex users, which are chargebacks or card disputes. If you guys haven't heard it, it's basically when you buy something online and then you tell to your bank, oh, I never received this item. That can happen with iPhones and expensive goods.
Friendly fraud.
Basically, it's fraud. You can also do it in hotels, and it's very common with the Moto transactions. When you give your credit card number to an hotel, and they process the payment. And then the reservation is under another person's name. And then they'll go to the bank, oh, I never been to this hotel, so I want my money back. And this can happen in 5-star hotels and creates, for my market specifically, it creates, then they don't want to do e-commerce, because if 10% of those transactions will go disputed and they lose the money, then they don't want to do it. What is your solution to chargebacks or card disputes, whatever you want to name it?
Chargebacks can be, there are multiple reasons for chargebacks.
Those are the main two reasons.
There's service-related chargebacks, there's card abuse or fraud-related, and then there's friendly fraud. So when you use your own card to buy something, and then you get buyer's remorse, and you say that you weren't the one who used that card to buy something or service. So the only way that you have to fight friendly frauds is through context. So you need to understand the card. You need to understand the behavior of that person. If that behavior looks funny or looks strange, for that particular card, you block it based on suspicious, let's say, intuition that it will be charged back with fraud, even if you believe that that card is being used by the legitimate owner. Okay, and that's of course we block loads of transactions where we believe that the card is being used by someone other than the legitimate owner. Okay, but we also block a lot of transactions where we believe that this is so far off the normal pattern for that person, but we actually know that the person is using the card, for instance, because it's coming from an IP that we know and it's associated with that card. So we've seen in the last 5 minutes that person buying something with that card coming from that IP. This is just this is just an example. But so we know the person is using, but it's so far off from their normal habits that we still block the transaction. Okay, does this make sense to you?
Still happens a lot, believe me. It's
it
the
does.
most
it
ridiculous transactions ever.
I know.
Even in card present, it's
yeah.
Another way is basically preventing this fraud before the payment actually is happened. So basically, we could monitor, for example, events on the e-commerce platform and check the suspicious activity before the payment is done. So basically, just a simple example, someone logged into the system, then they changed email, delivery address, and they're trying to pay for this order using the old card. This is potentially already a fraud. So basically, why not?
I just wanted to get your take on this. In the internet, there is a lot of testimonies of people, users, people representing businesses that were falsely flagged for AML or whatever, and specifically Stripe and PayPal. That's the most that I saw, and I just want to hear your take on this. How much of a responsibility should companies have to set up an appeal system and a human layer, not to all the positive checks, because there is a lot of positive checks, but how much of a responsibility should systems and companies set up a human layer or an appeal system so that people don't get on the wrong side of a false positive? Thank you.
Great question. I'll take this one, then you guys can chip in if you want to. So false positives, they exist. They happen. Okay, it's unavoidable. It's the name of the game is to try and reduce false positives. Still they exist, and I definitely agree with you that that systems, both on the transactional side, but also on the, say, merchant-initiated fraud side. So we've blocked, we've shut down thousands of merchants over time already, and some of them, for sure, were incorrectly blocked. Hopefully not many, but I know of a few cases, and we do have a system that allows our customers to unblock themselves by submitting an appeal. On the transactional side, sometimes we block. So basically, when we believe that that a card is being used by a person that's not authorized, it means that that card is exposed. So more often than not, we actually end up blocking the card, or our AI blocks the card. Okay, but then we have a way also for our customer, in this case of the cardholder, to interact with our system and to say no. So this is me. So I do want to buy stuff from this merchant in particular, and this transaction that you flagged as fraudulent was not fraudulent. So please lift the restriction. And this is very important. Of course, it causes some friction. And it is our duty to be very mindful of this friction and be very mindful of false positives ultimately.
Thank you very much. We're going to wrap up this session. Our time is up. Thank you very much for everyone for listening as well.